been spared. Banks exposed to the Turkish market dragged down European shares. London's FTSE was also hit hard by a fall in travel stocks, with TUI and Thomas Cook the worst performers. And Wall Street is bracing for a lower open, with US stock futures slipping over concerns about Turkey. Well, Turkey's central bank has swung into action to support its currency after the lira's fresh falls. It's lowered the proportion of deposits that banks must park with the regulator. That applies to lira as well as foreign currency deposits. The central bank's also curbing dollar-lira swap deals to discourage speculative bets against the local currency. And it says it'll take more steps to ensure banks and other financial institutions have enough cash for their operations. Well, for more on this, Jameel Ahmad joins me now from Limassol, Cyprus. He's the head of strategy and markets research at forex broker FXTM. Thank you so much for your time. Firstly, you heard there a snapshot at what Turkish central bankers are doing to help stem this fall in the lira. How are markets reacting to those moves?
Thank you very much for having me. It's always a pleasure for FXTM to contribute. So obviously the talk of the town and the talk of the global world once again today is the crisis in the Turkish lira and how this is impacting other markets across the globe. What investors really want to see, and they've wanted this for some significant time now, is a serious increase in Turkey interest rates in order to prevent the lira from falling any further than it already has. Obviously, the currency is in complete freefall. Because the central bank have yet to raise interest rates and maybe will not be able to raise interest rates, it's quite possible that the Turkish lira will continue to remain very volatile and that global markets around the world will also remain sensitive to shocks and to volatility because of the story that is developing with the Turkish lira.
And we've seen somewhat of a contagion effect on emerging markets. Can you explain to us why is it emerging markets that are feeling the heat from the fall in the lira?
Well, for starters, the Turkish economy and the Turkish market is seen as an emerging market. But generally, what happens when there's such a period of very intense market volatility is that it causes a risk-off atmosphere from investors. When investors become less attracted towards investing in riskier assets, which generally include the emerging market stocks and the emerging market currencies. This risk-off atmosphere is exactly why other emerging markets such as South Africa, India, Indonesia, Russia, even the Mexican peso has been hit by this, have suffered in the early hours of Monday trade.
Okay, Jameel Ahmad, thank you for your insights from Cyprus. Now to other top stories from